Does it feel more like a bubble about to burst, or are we sort of in the early innings of this cycle?
The sirens have been just blaring when you see both parties intent on printing money and have a tolerance for printing money to address their problems. But at the end of the day, this world has become very digital and we're all online all the time, and the internet needs some sort of form of native money. And what Bitcoin has done is it's exuding and it's adopted the properties of gold, but it does it in a more modern way.
To me, Bitcoin is still a baby asset. It's been around for 15 years. 15 years in relation to other inflation hedges and other, quote, durable assets like gold, like real estate, farmland, and so forth. 15 years is still very, very new.
The one thing that gold has on Bitcoin that is less of a debate is durability because of the Lindy effect. I mean, gold has Lindy that spans generations and empires, whereas Bitcoin doesn't even have durability or Lindy that spans a century.
Gold is sought after globally, right? I don't think there's one country in the world that doesn't want more gold. Bitcoin is banned in certain countries. Why do you think, for example, countries like China, why do you think they haven't embraced Bitcoin? Jack Dorsey's former CEO of Twitter, he says, if Bitcoin doesn't become a medium of exchange, it's failed.
The whole crypto space is beyond speculative.
What, in your view, throws Bitcoin off the rails? What could create a disaster for Bitcoin? Hey everyone, this podcast is not investment advice, and I'm certainly not a financial advisor. Just a guy who spends too much time reading about markets. Before investing, do your own research, talk to a licensed advisor, and remember, risk is part of the game. All right, welcome back to another pod. Every few decades, the financial world hits sort of a tipping point when the old order bends under the weight of new forces, new technologies, and often new policies coming from government. And I think we're living through one of those moments right now. The United States just crossed $38 trillion in national debt. $38 trillion. Yet global markets, real estate, gold, and Bitcoin all hover near record highs. It's a paradox where you have prosperity on paper, but a lot of unease in households and even amongst investors at the same time. You have geopolitical tension, trade wars, and social unrest are eroding confidence in the very system that has helped build our prosperity. So in times like this, investors often look for anchors. For some, it's gold. For others, it's Bitcoin. And increasingly, for a new generation, I think it's both. Today, I'm joined by someone who understands that intersection, I think, better than most people. Jared Feldman, Senior Vice President of Operations at iTrustCapital, one of our sponsors and one of America's leading alternative asset investment platforms. He's a former financial advisor turned early crypto investor, and Jared spent his career analyzing a lot of the macro forces and how they shape investor behavior. So today, we're going to dive into the current macro setup as it relates to gold and Bitcoin and how these assets might behave in the coming months. So Jared, welcome to the pod.
Thanks for having me. It's nice to be here.
So let's jump right into it. We've got $38 trillion now in US debt. It's probably going to 50 trillion. It's just a matter of time, and maybe a lot higher than that. We have sticky inflation, markets are near all-time highs, and yet the Fed is contemplating another round of rate cuts. When you look at this environment as it relates to things like Bitcoin and crypto and gold, does it feel more like a bubble about to burst, or are we sort of in the early innings of this cycle?
I think that the market is trying to get a handle as to the why behind interest rate strategy right now. And I can't recall any time in the financial markets where there was so much debate amongst macroeconomists when it comes to what should be done with interest rates. Should interest rates be lowered? Should they stay the same? Should they go up? I've seen smart people argue all three of those different viewpoints, which creates so much confusion for the market. And I think that's potentially why you see a lot of overvaluation when it comes to assets. You're seeing it with gold, right? People are flocking for a risk off, kind of safe haven asset. You see it with Bitcoin because people want something that kind of has a macro hedge feel to it, but maybe is a little bit more risk on when it comes to like risk reward and expected return. And I think that people are also going into and trading stocks because they see inflation as an issue as well, and they want to be able to hedge that inflation by investing in something that continues to go up. And we see a lot of that with stocks also. I must hedge myself as well by pointing out that iTrustCapital, does not provide investment advice, and anyone that wants to partake in the market should, discuss that with their family and, more importantly, a financial professional. But what we see with our clients is a big turn toward investing in all sorts of capital markets, right? Whether it be stocks, crypto, precious metals, as well as even real estate, because of that fear for inflation and the fact that they just want to be able to make sure that their dollars aren't losing purchasing power. And we really hear that from our clients every single day. As to what stage in the cycle we're at right now, it's really, really hard to tell. There's been so much appreciation when it comes to asset prices in general, and I think that it's important that everyone takes a risk managed approach to their investments and always have dry powder to be able to deploy into the market or for emergencies for their family and business.
Sure. So I want to hit a little bit harder on that point. So when it comes to, let's just focus on Bitcoin for a second. Obviously, I own gold, I own Bitcoin. I like these assets largely for the inflation hedge on the gold side. And for Bitcoin, to me, I like the speculative side of it. I own it for price. I'm not one of these Bitcoin maximalists. But when you look at, say, your clients or iTrust as a whole, this last sort of leg up, let's call it since summer 2024, Bitcoin's price has, roughly, let's call it slightly just under doubled. Have you seen more investor action on the iTrustCapital side into things like crypto and Bitcoin? Has it risen in the last year or so? Are you seeing more interest in Bitcoin on the iTrustCapital platform?
Unequivocally, yes. Over the last year or so, we've seen a lot of interest in deploying crypto inside retirement accounts, as well as gold and silver. And we can talk about that, later in the conversation. But we've seen rabid interest from our clients to get crypto into a retirement account since 2019 when we launched, right? It's why we founded the company in the first place. And there's been a lot of back and forth in terms of regulation on crypto, right? Crypto folks don't want no regulation. They want fair regulation. And I think that the current administration has signaled that there will be fair regulation and a lot of formalization when it comes to crypto within the US economy. And that's been very, very positive for crypto investors. And I think that as soon as there is the possibility that this administration would win, which turned into the inevitability and actual winning for this current administration in November, we've just seen a gradual, sudden, and then violent increase in interest in crypto on our platform and really in the crypto market in general over the last year. So we've always been really successful when it comes to onboarding clients, but there was definitely a lot of renewed interest toward the end of last year, as you were alluding to.
Where's the average investor these days as it relates to things like Bitcoin, right? And I feel like just from my conversations and the emails that we receive from our subscribers that there is a heightened interest, especially from retail investors, into Bitcoin. But I feel like they're investing, and again, I'm just deciphering, I'm reading between the lines, but I feel like they are getting involved in Bitcoin just because there's more activity, the price is moving. I'm not sure, like when people say, Bitcoin is built on trust and math, which it is, that is a great fundamental, but the average person at least again, from what I see, still trusts institutions and not really algorithms. So I guess what I'm trying to get at is what has to break for everyday people to move a certain allocation, maybe it's 3 to 5% of a portfolio, like a lot of people do with gold. What will it have to take for something like that to happen with Bitcoin? Because I still see a lot of the, let's say, Gen X boomers, they either have none or very, very little exposure to Bitcoin. It's almost like the trust still isn't there. And I feel like something has to break or something has to happen for more wider adoption. What's your take on that?
No one wants to be the first. No one wants to be the first person in their friend group, family, institution to purchase an asset like this. We've seen that throughout the entire life cycle of crypto. What we've also seen is that a lot of people have the courage or the knowledge about what's going on in the macroeconomic environment to purchase crypto spot, right? Just buying it for themselves in an exchange account or in self custody. People have been doing that for the last 15 years. What I usually tell people is that if you look at what's going on in the macro environment, and if you can't see that the fact that both parties in the United States seem intent and or tolerant of printing money to address their problems, and you don't think that crypto is a potential solution or antidote or asset you should buy as a result, then you're probably not going to be swayed anytime soon, right? Because I think that the sirens have been just blaring when you see both parties intent on printing money and have a tolerance for printing money to address their problems. With that
Mm.
said, something that you mentioned really holds true, and that people trust the institutions. And I think that when you look at institutions adopting crypto, it leads to more people thinking it's okay to purchase, right? First, it was doing it through a Coinbase, a Kraken, or one of those mainstream exchange accounts. Then it became more accepted when you can do it through something like Fidelity. Then it became even more acceptable when they offered ETFs, right? More people flock into it when it's just there through institutions that they quote unquote trust. So what's going to be the next stage for that? The next stage for that is being able to buy crypto directly through a bank account that you log into every single day. And when you look at announcements that are happening almost every single week now with these banks that are going to be open to offering crypto through their platform, that'll inevitably lead to adoption, because when people see their institutions that they trust offering it, they're going to feel more comfortable allocating, right? First it was spot, then it was ETFs, then it'll be offered directly through your bank account. And I think that'll just inevitably lead to your average person purchasing it.
The thought process is the next step in crypto adoption is kind of like going through your bank, almost like a Forex service.
I think that in order to get the next 10 million crypto investors, it's going to have to be more readily available through interfaces that people trust, right? Because as I was saying before, if you are an investor and you're looking at the macroeconomic environment and you haven't already concluded that crypto is something that, or Bitcoin is something that you should be purchasing, then you're probably not going to get to that point based on macroeconomic or world conditions, right? If you haven't already done it because of the macroeconomic environment, which a lot of people would argue has had a lot of signals that crypto is something that should be in people's portfolios, then you're probably not going to come to that conclusion anytime soon. So it's going to have to be offered through institutions that you trust in order for you to be more open to buying it. And I've seen that with friends and family. Like they have no interest in the asset because they don't think it's legitimate and they're not concerned about the macroeconomic environment. But if it was offered through their regular bank account, they might say, wow, if it's being offered through my regular bank account in my bank app, then maybe it's something I should look at because my bank is offering it.
Mm-hmm. I'm starting to see, even with people who probably never looked at gold or is just wasn't even in the back of their mind, we're seeing a lot more attention toward gold, especially amongst our subscribers, than Bitcoin. And I've listened to a few of your recent pods, and I think you have a great way of breaking it down, the comparison between the two, the Bitcoin and the gold comparison. And for the record, I know you do like gold, you like Bitcoin. I know the people at iTrustCapital um, they also are supportive of gold and Bitcoin as well. So, but the way you simplify and break down both the pros and the cons of gold and Bitcoin, I think would be helpful for our audience if you wouldn't mind.
Yeah, happy to. There is a Venn diagram between crypto investors and precious metal investors, and there's overlap when it comes to ideology, macroeconomic views, and investment theses. And the thesis is as follows: governments have been spending a lot of money. People feel that governments have been out of control and irresponsible when it comes to spending. There's been a lot of inflation, and they want to hedge to all of the above. In order to do so, they feel that Bitcoin and gold satisfy that hedge, right? And what you've seen over time is both can be argued to be stores of value. The truth is that gold's been around for thousands and thousands of years, and it's most certainly served and will continue to serve a purpose. But at the end of the day, this world has become very digital, and we're all online all the time, and the internet needs some sort of form of native money. And what Bitcoin has done is it's exuding and it's adopted the properties of gold, but it does it in a more modern way. Gold is transportable and transferable. So is Bitcoin, but Bitcoin does it in a more modern way. You can move your Bitcoin by just putting it in self-custody and going to another place and having your self-custody to plug in to the blockchain and to be able to unlock your crypto and pay someone, right? That's a very modern way of moving money. It's durable, right? Both Bitcoin and gold are very durable. They've both survived the test of time. Bitcoin over the last 15 years, gold for an extensively longer period of that, but they've both proven to be durable. They're both immutable, right? You can't change these protocols, right? You can't change a bar of gold. You can't change the Bitcoin blockchain. They're both verifiable, right? You can verify that gold is real. You can utilize open source code to verify that your Bitcoin is real. There's scarcity, right? There's only a finite amount of gold in the world. There's only 21 million Bitcoin that can ever be produced. The point that I'm making is that Bitcoin exudes these properties in a lot more modern way. And that's why people on our platform mostly choose to either invest in one or both of these assets because they want to diversify the means in which they hedge against the macroeconomic environment.
Great breakdown. I want to push back a bit on the durability. Again, I own Bitcoin. I believe in Bitcoin. But to me, I still look at it as a consequence. It's a speculative asset in that I think it tightly correlates to the NASDAQ. I think it's a consequence of excessive money printing. It was birthed out of the great financial crisis back in '08. People often talk about, especially some of the brighter minds in the Bitcoin space, they often talk about these 4-year cycles, right, as it relates to halving events and so forth. But to me, Bitcoin is still a baby asset. It's been around for 15 years. 15 years in relation to other inflation hedges and other, quote, durable assets like gold, like real estate, farmland, and so forth. 15 years is still very, very new. And people point to this 4-year cycle as it relates to like, oh, Bitcoin's at this part of the cycle. This is what's going to happen over the next 6 to 12 months. It's like, well, you've had 3 4-year cycles. You're in your 4th 4-year cycle, and you're using that as like a pattern of history. To me, 15 years seems like an asset in its infancy. And so durability is still in question. I'm not debating the merits of Bitcoin, but I just think that, don't you think 15 years, it still kind of has an unproven track record? Like it's a bit early.
Absolutely. And I think that's why when you look at all of the points of comparison between Bitcoin and gold, the durability is the one that gold technically wins, right? I mean, you can make
Right.
the case that Bitcoin is more transferable, and you can make the case
Yeah.
that Bitcoin is more verifiable, and you can make the case that it's easier to divvy up and break apart
Yep.
Bitcoin than it is to break apart gold. But the one thing that gold has on Bitcoin that is less of a debate is durability because of the Lindy effect. I
Yeah.
mean, gold has Lindy that spans generations and empires, whereas
Yeah.
Bitcoin doesn't even have durability or Lindy that spans a century. Right. So I think that gold is unequivocally more durable when you measure it based on time than Bitcoin is. And, that's just the reality of how early we are in Bitcoin being an asset class.
Yeah, I agree. I agree. And the Lindy effect, absolutely. Now, the one thing too about gold is sought after globally, right? I don't think there's one country in the world that doesn't want more gold. Bitcoin is banned in certain countries, right? And certain countries view it rather suspiciously because the inventor of it, so to speak, is unknown, right? There's a lot of theories out there as to who the inventor was. There's conspiracy theories that it was, could be the CIA, could be, who knows. Regardless, it's not as widely accepted as gold, which leaves the cloud of, to me, uncertainty about its future to a degree. And why do you think, like, for example, countries like China, why do you think they haven't embraced Bitcoin?
Control. I mean, you can't control people when they have financial freedom. And when you look at any country that utilizes a social credit system that monitors citizens and has a tighter control of their citizens in general, they're not going to like Bitcoin. They're not even going to like publicly issued stable coins, right? They're going to prefer central bank digital currencies. And I think that any country that wants to have some sort of control over citizens are not going to appreciate Bitcoin at all because Bitcoin equals financial freedom. Does that impact global adoption? I mean, absolutely. But I think that's also part of what makes Bitcoin scarce in the sense that it isn't available to everyone. And I think that there is value in that as well.
Mm-hmm. A great point. I agree regarding China, but I look at it as, okay, like, I own it. I'm not as new. I'm not as seasoned in the space as you are. I've been in it for a couple of years. Um, but I look at it as like, okay, today it's worth 2.5 trillion or whatever it is, in and around there. How does it get, for me, how does it get to 20 trillion? How do I get my 10 bagger out of this? And so my natural inclination is, well, wider adoption. You need the world's largest economies, the nations that control them, to adopt it in order to get to that level. And that would be obviously the US, which it has under Trump especially, but China as well. China is going to play a major role in that. India as well. Like, these countries need to adopt it, I believe, to get to the level that a lot of people are calling for, and that I'm speculating it could get to as well. But that is, to me, one of the bigger roadblocks is the global adoption. I look also at, and when I say global adoption, I'm not saying it isn't being adopted around the globe. It is, but I just mean those major economies adopting it is a game changer, and that's, I think, what gets it the 10 bagger from here. But I look at also, like, Jack Dorsey's, obviously the former CEO of Twitter. I look at his comments about it, and I tend to agree. It's like, he says, if Bitcoin doesn't become a medium of exchange, it's failed in his eyes, right? Now, when I first started researching Bitcoin, I agreed. It's like, okay, this can be, the premise of this is really, really cool, but I don't know if it will succeed unless people start, buying things with Bitcoin, right? And so that's what gave me hesitation early on not to invest in it back in like 2014, because I'm like, the US government will never allow this to be a currency. There's no way. Do you believe that Bitcoin has to become a medium of exchange to sustain the test of time, or can it just remain this sort of digital gold store of value?
I don't think that Bitcoin has to become a medium of exchange or be globally adopted by nation states to hit 20 trillion. I don't feel that way at all. I think that Bitcoin's already disproven those narratives and busted through those roadblocks over time, right? Over the last 10 years, people have been saying that Bitcoin needs to be a medium of exchange and needs to be adopted by institutions and by nation states to hit a certain threshold when it comes to price and market cap. And it hasn't become a medium of exchange the way that the digital cash narrative was described in the white paper, and it hasn't been globally purchased by nation states, yet it's made its way from $100 all the way to 126,000 US dollars per BTC over that time, right? So it's already kind of disproven those narratives, in my opinion. I think stable coins are the real world asset use case for payments in the crypto sphere. And I think that these other digital tokens, whether it's ETH or Sol or Bitcoin, all have different utility cases. Yeah. And the Bitcoin utility case is store of value, non-government, non-third party required form of money slash commodity. And I think that just that narrative in itself is going to be enough for Bitcoin to hit 20 trillion over time. It's just a matter of time doing its thing and the adoption curve continuing to go up and to the right. Because the adoption curve for Bitcoin is based on demand for people, right? We've seen such a low percentage of the global population has purchased Bitcoin, and it still has the market cap that it has. And then the finite supply, right? Every single four years, there's a halving, and the amount of Bitcoin that's issued per block goes down, right? So when you see increased demand over time and then decreased issuance, that adoption curve continues to go up and to the right over time. So I don't think that medium of exchange is super important. And I don't think that, nation states adopting it will allow it to get to 20 trill. I think it'll do that on its own potentially over the next 10 to 15 years. And I think that nation states will buy Bitcoin, but I don't think that it needs those things in order to be successful. And I think it's already proven that.
Let's imagine a real kind of stress event, maybe like a sovereign debt crisis or a major currency collapse. In that scenario, do you think Bitcoin behaves more like gold as like a safe haven? Or does it still kind of trade like a risk asset that sells off with everything else? Because again, I'm just going back to the digital gold. This is where I wrestle with. So to me, again, I say Bitcoin's a speculative asset. And a lot of people say it's the digital gold. But in that scenario, does it behave? At what point does it behave like a safe haven asset if it is a digital gold?
I don't think we've seen Bitcoin really tested in that environment at all. I mean, I think that the world, when you look at like tariff wars, physical wars, any sort of issues with the market. I mean, even like the 2007, 2008 financial crisis, that was like pretty bad. But at the same time, I don't really think that we've seen like a big country and their currency and their economy collapse to like a huge existential kind of extent where there was like a complete collapse in a currency. And I think that if that happened in a large country, like no one can really say, what would happen in that scenario to risk off or risk on assets. But the theory for Bitcoin is that a collapse in a world reserve type of currency would lead to Bitcoin becoming that reserve currency, which would naturally increase the value of Bitcoin, not just because of world currency status, but because if fiat purchasing power goes down, then the value of something like Bitcoin and any sort of risk asset goes up. And that would be the working theory. I mean, I would be concerned. I mean, if I was a gold investor and my theory was that the world is going to potentially have a huge turbulent event that led to the collapse of the fiat currency, I mean, I would be concerned about how I'm going to be able to protect and move my gold around if I had, too much of my net worth in these, multiple ounce bars that I would need to lug around in some sort of emergency scenario. So I think that there's just considerations for all sorts of investors in the event that, the world goes to, shit, so to speak.
Yeah, fair enough. What do you make of all the leverage in the crypto space, like Bitcoin included? Obviously, we saw that massive sell-off a couple of weeks ago. To me, it tells me that there's a lot of participants trying to make fast money in the space, which will inevitably add to the level of volatility. right? And that just further, I think, further strengthens my argument that Bitcoin is still a speculative asset with all this leverage in the system. What do you make of all this leverage?
It's such a speculative asset. I mean, I don't want for your listeners to get confused that, I'm under the impression that Bitcoin is like this buttoned up, uh, done, sophisticated,
Right.
um, ready to go asset. It's a very young asset. The whole crypto space is beyond speculative. I mean, Bitcoin is the least speculative out of all the crypto assets. Even if you look at like Bitcoin over the last year with all the turbulence and leverage and flushing out and, corrections and just crazy events in the crypto market. I mean, Bitcoin is still, up 50 to 60% over the last year, which is extremely impressive, right? That for me takes a lot of the speculation out of it in a lot of ways. When you look at it over like any 1 to 5 year time horizon, it's a lot less speculative. Over short term periods, it's very speculative. But if you just look at like at the amount of leverage, but also quote unquote manipulation in the crypto market, it's because compared to the trillions and trillions, the hundreds of trillions of assets in the world, just sitting at 2 to 4 trillion is very small for the crypto market. And that just makes it very prone and vulnerable to manipulation. And I think that that's just the reality of the space is like when people take out leverage, they're more vulnerable to manipulation that's in the crypto investing markets as well. And that's just something that people have to understand what they're getting into, that if you're looking to get into crypto to make a quick buck, that it may not be the space for you.
Let's face it, one of the biggest frustrations investors have is taxes. You make the right call on that stock or explosive crypto trade, and then boom, half the gains are taxed. You took the risk and won, but the government takes their share of your gains. That's why I'm excited to introduce our sponsor of the pod today, iTrustCapital, the #1 crypto IRA platform in America. They've built a self-directed IRA platform where you can actually buy and sell crypto, gold, and silver inside a tax-advantaged IRA. Of course, you probably know trades inside an IRA are not taxable events under IRS rules. And I think the best part about iTrustCapital is they use the same institutional grade custody for crypto that BlackRock relies on. That is peace of mind, and they do it with no monthly fees, just a simple 1% transaction fee. I've spoken with the team and I like these guys. Real US-based customer service, security, and real tax advantages. And while I personally hold exposure to Bitcoin, gold, and silver through ETFs and mining stocks in my own retirement account here in Canada, iTrustCapital gives US investors the ability to hold the actual assets directly in an IRA. You can fund an account with a cash contribution, transfer an existing IRA, or even roll over an old 401k or employer plan to take more control of your future. So if you're looking to protect and grow your retirement with crypto, gold, or silver, check out our custom link in the description below and be sure to use promo code Pinnacle8 to claim your $100 funding bonus when signing up and funding a new IRA plan with at least $1,000. As always, all investments carry risk, and this isn't investment advice. Now, let's get back to the pod.
Because ultimately crypto investors over any sort of 5 year period have done very well. But people who get in over short-term periods, they certainly ride the roller coaster, or sometimes it feels like a washing machine, and they need to understand that's what they're getting themselves into over short periods of time.
The understanding, at least that I have, is there's a lot of younger investors in the space. And when I say young, let's say under 50, probably a lot more under 35. But I think their ambition is, look, I've been dealt a bad hand economically. It's hard to get a high paying job. I can't afford a home, blah, 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 blah. So they want to get into these fast moving assets, right? And then, okay, they have a little bit of success. Like, you know what? I think I know what I'm doing. They go on leverage, buy more, buy more, buy more. And it just seems like a desperate attempt at raising capital, or at gaining capital. So what I'm trying to say is the greatest asset, if young people are watching, and I'm not saying get into crypto and do this, do that. I'm just saying your greatest asset as an investor, as a young investor, is your time horizon. And to your point, if you zoom out and take more of like a 5-year approach, I would say even take longer than that. If you're under 40 years old, your time horizon is 25 years. And so that's your greatest asset. You don't have to be the greatest market timer. Your time horizon will sort things out if you make smart, sound investments and have a decent balanced portfolio. So, I want to jump real quick to sort of the threats to Bitcoin before I let you go. So again, love Bitcoin. I think I view it as a speculative asset with the potential to become a digital gold and a staple down the road of most portfolios. What, in your view, throws Bitcoin off the rails? What could create a disaster for Bitcoin? Is it quantum computing? Is it a bigger, better Bitcoin? What are some of the biggest, let's say 2 or 3 biggest threats to Bitcoin that you see over the coming, let's say 5-10 years?
I can't imagine it being a bigger and better Bitcoin because of one, the Lindy effect that I was referencing earlier. Just Bitcoin has kind of let time do its thing and it's proven itself over time. And I think that anything that wants to be a bigger and better Bitcoin would need to do the same. So we're kind of like 10 to 15 years away from that even being a conversation. I've
Yeah,
seen the
and
quantum computing.
just for a quick, the Lindy effect, just to summarize it real quick, is that time in the game solidifies the established value of an asset, essentially. Sorry, go ahead.
Yeah, thanks for clarifying that. And then the quantum computing, people have made that argument that quantum computing will be able to crack the private keys for Bitcoin and other digital assets, and that certainly sounds scary. But I think that any of the quantum computing progress we've had so far have only been able to perform like a fraction of the computing power that it would take to crack Bitcoin's cryptography. And then I think by the time that the quantum computers are able to do so, Bitcoin and all cryptos will have more quantum resistant cryptography. So I think it's kind of like a race to who can solve that first. But that's certainly a risk, right? That can be an existential risk, no doubt, to the crypto space. In terms of what can hurt Bitcoin the most, I think is just continued inconsistency from the macroeconomic communication over the next 1 to 5 years, right? I think that if as Bitcoin continues to be a risk on asset, it'll be highly manipulated and it'll react to conversations about tariffs. It'll respond and react to things that can happen to the stock market, and it's just highly correlated to the stock market right now over certain periods of time. But I think even with that argument, over 5-year periods of time, Bitcoin has been highly successful and been really resilient from a price perspective. So it's really hard for me to kind of comment more than that in terms of what can hurt Bitcoin from like an existential kind of perspective, because I think that market participants and market makers and really all sorts of influences have tried to kill Bitcoin over the last 15 years, and Bitcoin's only gotten stronger. So it's really hard for me to imagine what can take it down at this point when it comes to like some sort of catastrophic event.
My biggest fear with Bitcoin, whatever, 10 years ago was regulation, right? And a lot of the smart people in the space now say it's too big to regulate out of business. Is that kind of your view, that it's grown so much now that regulated? I mean, the BlackRocks of the world are involved. It's a couple $1 trillion industry. You have, I think, 30 million Americans who are in the crypto space. Is it too big to shut down from a regulator standpoint now? It's kind of outgrown
Well,
that risk.
it's too big to shut down in the sense that this is open source code and the blockchain lives not in our physical world, but in our digital one. So it's impossible to get rid of it, so to speak. I think that attempts to get rid of it, particularly through aggressive, unfair, and sometimes unlawful regulation, have also only made crypto stronger, and its price has been pretty resilient over time, even with government crackdowns. So I think that if there's a change in the administration, and if a new political party takes control in 2028, I think that we can see short-term volatility with Bitcoin and crypto to the downside, but over time, it's been very, very resilient. So I don't even think that government intervention can potentially, cause anything catastrophic over longer periods of time. I've seen people argue, oh, crypto can only survive and thrive when the government is against it because it was designed to battle the government and government action. I've also seen people argue, oh, now that the government is for it and the government has more acceptance around it, that's also not good for the market. So I've seen people argue both ways, and because of that, I just feel like it'll continue to do its thing over time, regardless of government intervention or action.
I think that's a great place to wrap it up. But first, Jared, so I want you to tell our viewers about what you do at iTrustCapital. I think it's pretty innovative. Obviously, you guys are a sponsor of our pod. Now the company started with, I think, a group of individuals who were actually, I don't know if they were gold bugs, but very supportive of the precious metal space and what it should represent in individuals' portfolios. But tell us about iTrustCapital, the services you provide, and kind of how you've evolved into what you are today.
iTrustCapital is a crypto platform that allows for individuals to purchase over 85 different digital assets. We also have physical gold and physical silver, which are very popular on the platform. Our clients, our retail clients, but they get access to institutional grade crypto solutions, whether it's liquidity, staking, or just storing their assets. They're getting access to opportunities that are usually only available for institutional grade investors. We work with Coinbase Prime, Fidelity digital assets, as well as Fireblocks for institutional storage. Most people that invest in crypto that do it through one of the mainstream exchanges do not get access to that sort of institutional level form of storage. We also have gold and silver. They're very popular on the platform, and our company was founded by gold bugs, and they were people who believed that individuals should be able to invest their retirement account funds into commodities, and that naturally led to digital commodities, which is what our cryptocurrencies represent. Alternative assets are becoming progressively popular within self-directed retirement accounts. The current administration has greenlit these sort of assets to be more readily available in non-self-directed accounts. So there's just a huge narrative shift toward allocating into these sort of assets in a retirement account. Our retirement accounts are also built in secure closed loop systems, meaning that funds can only be sent to you, from you, and can only be sent back to you, which is a super important feature because in the modern world, there's so many hacks, so many frauds, there's so many attempts at phishing and scams that we've heard story after story from our clients about how they were the subject of one of these attempts, and unfortunately, crypto was drained from their account. And because of that, we built, our platform on a secure closed loop system, and our clients asked for us to build the same security for our retirement accounts in a non-retirement account, which is why we launched our premium custody account, which offers the same security features in a non-retirement account. So high level, that's what we do and why we do it.
Jared, it's been an absolute pleasure, man. Thank you for joining me today.
No, sure. Happy to speak. Thanks for having me on.